Good evening, everyone. My name is Al Abdallah. I'm the Chief Operating Officer of Urban League of San Diego County, and it is indeed a pleasure to be here this evening with all of you. Um, we started the Urban Masterclass Network series with coaching and networking opportunities designed to help you walk in wholeness, thrive in economic stability, and be aware of social responsibility. This first session, or the first session, I should say, was landing a job in this market. It focused on tips for securing work in this current environment with the company UPS, its current positions, how to apply, and how to succeed in their company. Our second session was environmental justice, shaping our cities. It focused on issues and impacts in communities of color. This evening, we will focus on forbearance. As the current forbearance mortgage relief options come to an end in a couple of weeks, many are wondering if we'll face a foreclosure crisis next year. This is understandable, especially for those who remember the housing crisis that began in 2008. Many homeowners are concerned that they'll have to pay the deferred payments back in a lump sum at the end of the forbearance period. Tonight, we are fortunate to have some experts who will share some insight and tools that we can use. Serving as our moderator this evening is Frank Robinson, Managing Director, Diverse Markets and Community-Based Programs Executive at Union Bank. Please welcome Frank Robinson.
It is indeed a pleasure to be here as your moderator tonight. I'm really thrilled. When the Urban League reached out to Union Bank about forbearance housing issues, especially around COVID, we were excited to participate. Along with colleagues and other industry experts, we'll share with you some advice and some tips around forbearance. This evening, we have three panelists who will introduce themselves and provide an opening statement on the importance of understanding forbearance. Please help me welcome Daphne Pruitt, who is the Vice President of Community Lending and Diverse Markets Business Development Officer for Bank of the West. We also have Steve Kramer, who is a loan collection and default management division at Union Bank, and Jacqueline Laquindanum, who is the housing counselor and instructor at the Urban League of San Diego County. I'm going to allow each one to introduce themselves. Gina, would you please begin? Give a 2-minute statement about yourself, your background, and what you hope to achieve and accomplish this evening at the Urban League Masterclass Network.
All right. Thank you, Frank. As Frank said, I'm Delphine with Bank of the West. In my role at Bank of the West, I am responsible for increasing home ownership opportunities for first-time home buyers, as well as low to moderate income individuals and minorities. I like to say I have a fun job because I get to go out and engage and work with community organizations and trade associations and organizations like the Urban League of San Diego County to partner with so that we can increase home ownership opportunities. I have been in the business, about 30 years, which means I'm only 35. So I've been in business 30 years. And prior to coming to Bank of the West, I spent nearly 15 years at Fannie Mae and worked in all areas and was at Fannie Mae during the early housing crisis. Today, if you get nothing else from this, I would like for folks to know that there is assistance available for you. And the first step is to make that phone call. Often when folks get in situations where they're not able to make their payments or they have other challenges, we tend to kind of withdraw from it. But there is some hope here, and there are programs available to assist those, and we'll talk about that a little bit more. But the first step is to always call your servicer. So tonight, hopefully we'll share some insights on the programs that are available and the organizations and others out here to help you navigate that process, because one, it's not very difficult, but it is a process, and we want to make sure that you get the informed information that's needed to help you make the right decision and hopefully help you save your home.
Thank you so much. Steve, we'll go to you.
All right, thank you, Frank. My name is Steve Kramer, and I work with Frank at Union Bank. I've been with Union Bank for almost 10 years. I'm currently serving as a director over the servicing side of the mortgage business. Specifically, I manage the loss mitigation, mortgage assistance group, and the front end collections teams for the mortgage department. I've been in the industry almost as long as Delphine, not quite, for about 26 years. And I've had a variety of different roles, including originations, risk management, and also on the servicing side of the business. And to me, the big thing is really to help everybody understand that we as servicers are here to assist you in any way possible as you're navigating forbearance and the prospects of exiting forbearance, specifically with the various options that may be available to you. And as Delphine had mentioned, the importance of reaching out and allowing us to assist you is critical. And again, there's a number of different programs that are available, and we're here to work with you to find the best one to fit your individual needs. But it all starts with the communication, active communication with your specific individual servicer. And it's a pleasure to be here, and I thank you for having me.
Thank you very much, Steve. And last but not least, Jacqueline.
Hi, everyone. My name is Jacqueline Laquindanum. I am the newest housing counselor with Urban League. I love anything around home ownership. I love supporting people through their path of economic self-sufficiency. And I've been in the business not as long as these veterans. However, with my youth, I've been 4 years into the game. I recently also passed my real estate exam. So I'm very motivated to help people get through the path of home ownership. But then again, life happens. And such as this type of workshop as forbearance, it's not easy to get through it. However, what I want everyone to know is that there is power in seeking help. And so with organizations like Urban League, we want to help support you. So we act as a liaison. So when you're intimidated in talking to the servicer, or since you're in crisis mode, we are here to help keep the path clear, keep you focused on what your end goal is, which is to keep your home. So again, I thank you guys for having me. I am not an expert, however, I love helping. So, I'm grateful to be here.
Thank you, Jacqueline. I'm going to go ahead and get started because I think hopefully we'll have a whole bunch of host of a lot of questions. And if you do have any questions, we ask that you put them in the chat. And then we will get to those questions and have our experts answer those for you. But let me start with the first question. Many homeowners are concerned that they will pay that they have to pay the deferred payments back in a lump sum payment at the end of their forbearance. Is this true? And I start with Gina. There you go.
I'm going to defer to Steve. So in essence, the CARES Act that came out in March, which is actually going to be related to loans that are backed by the government, Fannie Mae, Freddie Mac, or HUD. So if your loan is with, and the investor is Fannie Mae, Freddie Mac, or HUD, there's going to be a set of guidelines from the CARES Act that apply to them. If they're not one of those three entities, and it's a private investor, a portfolio loan with another investor, they do not have to adhere to the CARES Act guidelines. So with the CARES Act, in terms of forbearance, I just want to go back a minute. In terms of forbearance, is that if you're experiencing problems making your payment, because of COVID, the first thing you need to do is just call and say you're experiencing problem due to COVID. You can get an initial 6 months forbearance. After that end of that 6 months, say you're in month 5, and, and you see that you're still in that same situation, you can get another 6 months, which means you get forbearance up to a year. And in terms of the CARES Act, that was actually went into effect in March. If you have a forbearance and it's time now and your situation has been cured, meaning that you're able to start making payments again on some level, then every situation is different. So you're not going to have to pay it all back in a lump sum. So we will look at your situation and determine based on your ability to pay and what your situation is. And then at that point, they'll determine what is going to work best for you. So it's not a one shoe fits all. And most people think I got to pay all this back. So in essence, you contact your servicer and they'll look at your individual situation and determine a path for you going forward. Because there's a number of paths that you can take, in terms of getting reinstated. Yeah, if we find out that you have it and you got the money to pay the lump, then yeah, but there can be some repayment plan. There can be where they look into a modification, but what it is, you don't know, and don't assume if someone else says something. I just really want to get rid of that myth that, everybody is painted with the same brush. Everybody's situation is different. So it's not a yes or a no. It just depends on your situation. But no, they're not going to ask you if you're in forbearance and you couldn't make your payments, then the servicer understands that you're not going to have a lump payment to do that. But at that point, they're going to dig a little bit deeper, review your situation, look at your financials, and come up with a path that's going to help you maintain your home and not go into foreclosure.
Great. And Steve, would you give a little bit more on that if you can? And then I did have one question that was in the queue, and they said, does this include VA loans?
Yes.
So could you
Yes.
also
Yes.
address that, please?
Yeah.
Yeah, it absolutely does include VA loans. They're a part of the CARES Act. And then also each individual, even though you may not, your loan may not be owned by an investor like Freddie, Fannie, or insured through VA or FHA, I would encourage everybody to contact their servicers because many of them have adopted a lot of those same CARES Act guidelines. And I think that's probably one of the biggest questions that people have is what happens at the end of my forbearance. Because usually you can initially go either 90 to 180 day forbearance, and then you may have the opportunity at that point in time to extend that forbearance. Obviously, contact your servicer for more information on that. If you're ready to resume payments, yes, the total amount is due at that point in time. Are you required to pay that in full? No, you are not. If you have the ability to do so, you absolutely can. But there are options, including the COVID-19 payment deferral, which is an option to take amounts that are owed through that process at the end of the forbearance and put them at the end of the loan in a non-interest bearing payment that would be due at time of payoff or maturity. Which is obviously a good way to bring your loan current without having to come out of pocket. There's also other options available if you're in any way your income is curtailed, or in essence you have a reduced income, but you're ready to resume payments. You just can't resume at the current payment amount. Many servicers have their own modification programs. Freddie and Fannie, FHA, VA all have modification programs that you can utilize to assist you to potentially be reviewed for assistance, upon qualification. So a lot of different options available. The key really there is just contact your servicer, explain your individual circumstances, and then they will work with you in finding the best option available to you. And Frank, did you have a question on top of that, or was that the VA? VA was the question.
That was the question.
Got
Thank
it. Okay.
you.
Yep. Perfect. Thank you.
I'm just trying to answer those in real time for some of these folks.
Makes
just want to be
sense.
there. Jacqueline,
Perfect.
do you have anything else? Because I think that you and Francisco are throwing things in the chat here. So want to make sure that we're addressing everybody's
Yes.
question. Go ahead,
Yes. So
Jacqueline.
I do want to say that as a counselor, we are here to help organize your documentation. And we do have the ability, with permission through paperwork, to help contact your servicer. So sometimes it's hard to communicate. And so if you're needing like a letter of explanation or how to scan your documents and whatnot, as well as this flow chart. So in the chat, we said that we have access to a flow chart. It's free for everyone on the Consumer Finance Protection Bureau website. That's consumerfinance.gov. We'll put it in the chat. Everything on there for your mortgage needs, mortgage tools, is free for the public. So I would advise people to look at the CFPB and look at your own loan servicer's website and just type in the simple word COVID-19 assistance.
Thank you. Thank you
So,
very much for that.
Frank, can I add
Great
something
points.
right quick?
Absolutely.
Yeah, I just want to add, because this comes up a lot too. If it's, you can also check and see if it's Fannie and Freddie, but if it's 1 to 4 units, that's still considered single family and can be owned by Fannie or Freddie. So you don't have to live in a house. If that's an investment for you, you got a 2-unit that you have and that you're not able to pay that, you can actually contact your servicer too. That falls under the CARES Act as well. So people think it just have to be those who own a home. But if Fannie or Freddie or, HUD or VA and you're an investor, you can still be eligible under the CARES Act.
Thank you. Thank you very much for those insightful answers. Did anybody have any other comments before I move on to the next question? Okay. Thank you so much. For the next question is, for those who still are in forbearance and unable to make their payments, foreclosure isn't the only option. What is the only option left? What are some of their options? And I'll leave that to anybody who wants to take on that first.
Well, first, we definitely want to know what is their credit score rating, because refinancing could be an option, but with the impact of COVID, it does refinancing make sense, because all you're doing is extending the life of the loan, and is that something you want to do? So I would say we have to know their financial profile to answer that type of question. But yeah, I mean, there's other options.
Got you.
Yeah, there's absolutely other options. And again, including options to be reviewed and evaluated, subject to qualification for modification options. There may be individuals out there that don't want to be burdened by a mortgage payment and some of the things that come along with home ownership. So there are also options and workouts available associated with what's known as a graceful exit if people are interested in those type of things too. Obviously, people that want to retain the home, which is obviously our primary goal as a servicer. Again, it's always important to contact your individual servicer, work with a homeowner counselor to work with the servicer and explore the various opportunities that may be available through their individual workout programs. But again, as a servicer, foreclosure is always the last option that we want to take. We always want to work with you, the client, and give you the most optimal outcome to the best of our ability. So it's always important, either through counseling or direct contact with your servicer. But again, the importance of reaching out, I just can't say enough how important that is.
And I would just add that in terms of refinance, it's really important to understand that if you're in forbearance, you can't refinance. Once the forbearance is cured, and you want to check with your lender and your servicer on that as well too, then you can refinance, but you can't refinance while your payments are suspended. So that's that option will come once they cure the forbearance. But
Gotcha.
there's numerous options, for them. And the goal of the servicer is really to help you keep your home. And if for some reason it doesn't happen, again, there's always short sale and other options you might want to explore. But once you call them, and I just can't say this enough, you have to make that first phone call. You have to call your servicer, and don't take the horror stories you might have heard from somewhere else, because every individual situation is different. And their goal is to help you stay there. It's not to take you home. It really isn't. I just want to stress that because I hear that so much. Oh, they just want their home and they doing this. No, no,
Mhm.
no. The goal
Yes.
is to get you to keep your home. And if not, figure out a plan to help you work it out that will help you have sustainable home ownership and not a plan where 6 months later you're in a situation again where you can't pay. It's going to be sustainable. And if so, if it's not going to be, and you can't refinance until you cure the forbearance, and that's generally, 90 days, and some in 30. You have to be out of that situation and making 3 payments before you can refinance.
Yep,
So,
great points.
yeah.
Um,
So I had a
mhm.
quick question. Just on what you just said. Can you give us probably a success story if you had any of like that for forbearance where a customer did call you? And I would imagine it is a very difficult and a stressful time for somebody to call, about a forbearance and you were able to assist them. Does any of you have any type of success stories from that? Or if you've heard of anything where, we were able to at your company or at your bank or with the Urban League to help them and assist them?
I'll start with Steve since he's in servicing.
Yeah, no, well, I mean, we have many, many, many
Right.
examples of success stories where people reach out to us. And again, you may be in a 6-month, 12-month forbearance plan. And again, it's important to understand that just because you're in the plan, it doesn't mean you can't exit that plan early. And another one of the misconceptions is that, well, when I'm in a plan, because I'm in forbearance, I can't make payments, but that's not true either. You can absolutely, if you have the wherewithal and ability to make a payment, it may be one payment out of the 6, 2 payments. That absolutely you have the ability to do that. And many people think once they're in the forbearance, hey, I can't make payments, but that's not true. But we have many customers that call and are ready to either exit forbearance and we got them into the COVID-19 payment deferral where they were able to take those past due amounts, put them at the end of the loan and resume making the regular monthly payments and get them back to par, if you will. And also with FHA, it's a little bit different. It's not it's known as a standalone partial claim is what they use the tool, but it's very similar to a payment deferral. We've had again a number of customers that have come. We have a number of them that request to be extended, have their forbearance extended. We extend the forbearance. They may request a 6-month extension. 3 months in, they may say, "Hey, we're ready to resume making payments," and we get them into a plan. But I think that the key commonality there is, even though we do a lot of outreach on our own to try to contact people in advance to just to kind of get a feel for where they're at, it's again incredibly important, based on your changing circumstances, to actively communicate with your servicer and make sure that they understand what's going on so that they can assist you.
Thank you for that. Anybody else?
And I would just add that I don't work in services, so I can't speak on behalf of a case that came through Bank of the West, but I know that our servicing folks work very diligently to service them. And we actually provide lists of HUD-approved counseling agency if they need
Yep.
assistance. If we have not heard from them, we'll send out that list with the website for them to contact a HUD counseling agency, such as the San Diego Urban League. But I've helped a friend that actually during COVID was having issues, and she was getting stressed out. And, because in her job, she actually had a stopping payment, and so she called and got the forbearance, and she was getting wary because the 6 months was up. And I'm like, well, your situation haven't changed. So won't you call? And I had taught her how to go to the Fannie Mae or Freddie Mac site and do a lookup to see who's your investor on your mortgage. and then to have her call. And so now they did do, because she's ready to, is back at work, and they did do a workout for her, and she told me that she's pleased. So there are folks getting help. There's some folks who might not have or had issues, and that's when you want to call someone like the San Diego Urban League, the Urban League in San Diego County, if you're in San Diego County, or another HUD approved agency in the market where you located, because they understand how that works. And so they can intervene and call on your behalf. They will even do a three-way call with you, and you have to give permission for someone to do that, but they would do that for you, because some people think, I don't know what to say, what to do, and they get so scared, but those are humans on the other side of the phone, just like you, and they're passionate and committed, to helping you, keep your phone. So yeah, so I would say that, yes, through a friend of mine who's happy now with her situation. But again, it's happening. It really is. It's happening.
Great.
And I want to add, Francisco he put it in the chat that you can find your local HUD agency by location. But the main thing, as Delphine said, is don't be afraid to communicate that you are not comfortable making the payments again. So like if you're in forbearance and they're like, okay, it's the end of the 6 months, can you become current? And so it's really good good practice to really stick to your guns and just say, look, it's not realistic for me to come out of this forbearance. I need more time.
So
Yeah, Jacqueline, that's actually a great point, because too often people, I mean, again, we talk about success stories, but there are instances where people aren't, honest with themselves, and they think, hey, let me just get out and get reestablished and resume making my monthly payments. And then they come to find out that 30, 60 days later, they're right back in the same situation. So being honest with your counselors, being honest with your servicers is critically important. And I think that is a great point.
So again, just to restate that, the question was, are the banks or whatever financial institutions or mortgage companies permitting those who exited the forbearance program to re-enter a forbearance program if their income dips or they're laid off? Okay, I just want to make sure I'm clear. And thank you very much for that. I appreciate that. I'm going to open up the floor basically for anybody who has any questions. And I don't see any other questions. And please, Al or keep me honest. Or did I miss a question that was in chat that we need to address by our panel?
No, Frank, I think you answered all the questions as well as the other, banking professionals. So, that question about that I posed about if you at the end of your 6 months and maybe you're, 30, 60, 90 days in, and you need to, oh my goodness, you know what, I've been furloughed again. Can I re-enter? So, I mean, I think that's a big concern. And also, I think a question that's been kind of posed is, how long, do you anticipate these forbearance programs to go? Do you think that they'll be going into 2021, 2022? Because again, with us going from red tier to purple tier and not having the vaccinations available, probably for the summer for everyone, I just don't see this ending anytime soon. So, what are your thoughts, or what are you hearing, from the banking side of things?
We'll throw that up to the panel. And then I also have another question for Monica, and I'll address that. I'll ask that question after this question's been answered.
Well, I mean, well, we don't know, because the CARES Act was established, and it's FHFA is the regulator for Fannie and Freddie. And they often extend things, but who knows if they're going to extend it or not. But that's the determination by them. They have a moratorium on foreclosures now, and they keep extending that. And what people don't understand too as well is that Fannie and Freddie also invest into multifamily, so there's renters there. Well, that moratorium extended not just only to single family, but any well, Fannie was the investor for multifamily where people pay rent. There was a moratorium on evicting folks from those properties as well too. And who knows, that's the regulator decision, what they're going to do with FHFA. But I think things are, not improving. So we can't determine that. I can't determine that, but so far they always will extend it once become the, once something look like it's going to run out, then they might come back and say, look, we extended it. And that's based on their regulator to do that.
Yeah, and
Yes.
I would echo that. I mean, I haven't heard anything specifically. I know that there's some, in Washington, there's discussions going on right now that some of our team members are involved in, but nothing has formally come out. And again, whether it's a federally mandated moratorium or even a state mandated moratorium, in many cases they're going to look out for the consumer and protect them as best that they can. So I'm sure we'll know more in the next 30 days.
Jacqueline, you had a comment?
And it's like the obvious. Oh yeah, no, it was just the same thing. Like it's economical factors. That's
There was another question in the chat, and it says, "Could you please explain the balloon payment?"
Yeah, for the COVID-19 payment deferral. Yeah,
Yes.
so what happens is the amounts that are owed, and in many cases it's the principal and interest amounts, and then any advances made by your servicer on your behalf, and usually that's escrow related advances, are placed at the end of the loan. It's an amount that's due at time of either payoff. Let's say you're refinancing or you sell your home and you pay it off prior to maturity, it would be included in that payoff balance. Or at the time of maturity, whenever your loan matures, that balance would come due. The nice thing is that it is a non-interest bearing balance. So if you think about that from a time value of money perspective, anytime you can let your money sit interest free for an extended period of time, it actually is to your benefit. And I think a lot of people's concern as well, hey, am I going to have to come up with $5,000, $6,000, $7,000, depending on the amount that's of the payments that are deferred at the end? How am I going to do that? And again, I think the one thing you want to remember is that servicers, even at that point in time, will work with you at the end on repayment plans and things like that to get that balance paid off if you don't have the means to pay it in one lump sum. So again, when you're near we usually say when you're within 6 months to a year to the point of your loan maturing and that balloon payment coming due, please reach out to your servicer and discuss those options with them.
And then I would add, that's when you might want to explore as one option if you need to refinance and pay it off, because now you're no longer in forbearance. And so that's when you can look at that as an option. But another thing came to mind too, that I was explaining to my girlfriend that I help, that you should keep paying your escrows. That's your taxes and insurance. The servicer is just collecting that on behalf of the state, and your insurance company. So that's not money that they pay out of their pocket. So you should continue to pay, because you don't want to get delinquent on your state taxes, or your insurance, or if there's something happened to your home. So I would encourage you, and if you can, is to continue to pay your escrows, and that's your taxes and insurance, so you don't get delinquent on that.
Yep. And if you don't have the ability to make those payments, the one benefit that, at least with Freddie and Fannie specifically, and I know that some servicers have adopted a lot of those guidelines, at the end of that, once you do your workout, there may be a shortage that a lot of times gets spread over a 12-month period. The one nice thing is that they allow you to spread it over a longer term, usually up to 60 months. to help to minimize the impact of that extra amount that you're going to be paying every month. So that option is available. If to Delphine's point, if you have the ability to make that escrow payment, by all means do so. If not, we do have some options for that at the end also to help minimize the impact to you.
Yeah. There was another question that was posed in the chat. It says, what about our taxes? I think we've answered the question, but I just want to make sure. What about our taxes? Do we still pay taxes in forbearance? Well, I'm not an expert, but I think everybody has to pay taxes, but I'm gonna let the experts give me the correct answer.
Yeah, I mean, sorry, go ahead.
Go ahead, Steve, I'll let you go.
Oh, I was just going to say that, I mean, there's two sides to this coin. The one is if you don't have an escrow account set up with your lender or with your servicer, obviously you're responsible for paying your taxes and you're responsible for paying your insurance. The lender, if you do have an escrow account set up with your lender will continue to pay those amounts for you, which could lead to what's known as an escrow advance. And as I mentioned earlier, there's options for escrow advances to be included in the deferred amount. If you go through a modification process, in many cases, they allow you to capitalize those amounts so you don't have to come up with those up front. Or in the end, you can always, there's the potential to allow you to spread that over a 60-month term. Again, just to be clear, if you're not escrowed with your servicer, it's critically important that you either maintain those tax and insurance payments or contact your individual assessor or insurance company and work out payment plans with them.
Thank you. Any other comment regarding that question?
No, Steve nailed it.
Okay. So I did have one other question that came up, and I'm not too sure this is going to be, this is a question around covering forbearance for student loans. I don't know if any of you have any expertise in that, but there was talking about a home situation and a student loan goes on. I don't know if we can answer that for this
Well, I can't,
person.
no, that's Sally Mae.
Administration.
But, yeah, so, but, I heard, and you might want to contact Sally Mae, that they were also extending the forbearance for student loans, but I have no idea what it is and for how long, but I saw something come across the news when I was watching the news about it. So you might want to contact, Sally Mae, your servicer on your student loans.
And I want to thank Francisco, who actually provided a link for student loan forbearance information. So if you see that, you can click on that link and get you those answers. And there was the big three, the three big student loan changes that could be in store under the Biden administration. So please look at that too. We did have another question. It says, what lessons were learned in the banking industry since the foreclosure crisis in 2007, 2008 that allowed the increased flexibility to work for homeowners to remain in their homes in 2020, 2021?
Well, definitely more regulations on the loan servicers, approving the public. That's kind of obvious.
Well,
Yeah, I think, go ahead. I'm gonna let you go, Delphine.
no, I was just gonna say that the Consumer Financial Protection Bureau, CFPB, that's a big name.
Yep.
You go to their website, they give you all the information, on there. And also, there's the new ways that they look at this. They adjusted some of how they modify loans. Things a little bit different. I was there, at the time I was with Fannie Mae, and when we was going all across the country and hosting these events and meeting with services. So I think the lessons learned has been applied and adopted, but CFPB and that is a big, I think a big change with not only just regulation, but them working with the GSEs, giving some flexibility on how they do modification, things of that nature. So a lot has changed, and I think for the better. I don't feel that deep sense of, it was so massive last time. I don't feel that this time. I feel that there's help. People learn from last time. As Stephen said, that servicers who are not Fannie or Freddie, or HUD or VA are now adopting some of the things that are going on there. I think there was a lot learned from that. But you still gonna probably have some people that slip through the cracks. But then overall, I just don't feel like, how challenging and how bad it was in 2008 now, in terms of, because they're trying to really help folks. And I see the government stepping up and doing other things to help folks.
Yeah. And actually, Francisco made a great point in the chat about TRID and the disclosures. So, all these things were put in play because there were so many ambiguous things happening prior to the 2008 crash. And so I also wanted to say about the student loan forbearance counseling question is you can come do a one-on-one assessment with us. We can work it out together to where we locate what your status is on your student loan and then help you navigate what your workout options is for your forbearance.
Thank you for that. Stephen, I think you may have a comment.
Yeah, and I was just going to add to what everybody has said. I think one of the big changes was what's known as a single point of contact within the default or the mortgage servicing world, where to improve continuity of contact between the servicer and the client was critically important, and thus allowing it to be a much more streamlined process, along with all of the different timelines. Now they're much more stringent on timelines, ensuring people have decisions on modification requests and things like that in a much more timely manner than what was before. So we've learned a lot, and again, it's been very challenging time, obviously, leading up to this, but I think we're positioned much better than we were back in the day. And I think, again, I think to Jacqueline's point, the underlying fundamentals are much stronger now than before. So hopefully that will provide more support so we don't see the type of crisis that we saw back in 2007, 2008.
Thank you for that. Well, I think we've come to the end, close to the end. And I just wanted to, first of all, ask for each one of the panelists to first of all, say thank you. This was very enlightening. I'm a banker for 24 years and I'm learning every day. And you guys certainly educated me tonight. The second thing is I want to allow each one of you to have a closing statement to talk about, again, forbearance, what you're seeing, but just sit us out with a bang. And ladies first, I'll let Jacqueline, I know she's about to jump on a plane, so I'm going to let Jacqueline start.
All right. Well, thank you everyone for allowing me to be a part of this. This was very insightful. I love that I'm able to be a voice for the community as well, because forbearance and people in crisis mode it's hard. I would say the main thing about forbearance for me is like being very transparent with your situation. So being very truthful and honest. And I did want to say, that word equity stuck in my mind while we were talking about this, because even though, your prized possession is your home, there's still a way for you to become a homeowner again, let's say in a few years later. It's not the end of the world, but it could be an option. And so that I would say, yeah, just transparency and honesty with self, and ask for help. That's my next one. That's it.
Thank you. Tafita, we're going to allow you.
Yeah, I would just say, call your servicer. Make the first call. Just call. And all these things are going to run through your head and you're going to think all these other thoughts, but just make the first call. And that, bad things happen to good people. With the pandemic, something bad had happened to good people. And I just say, don't stress out about what is my credit going to do, what is this going forward, because everything that happened can be repaired. You know, once you come out of forbearance, you make 3 on-time payments. If you want to refinance and do something, you can. You know, but the step is to make that first phone call, because every situation is different, and that servicers are here to help you. And most importantly, if you not able to make that phone call, still need some assistance and someone to coach you through that, and contact the Urban League of San Diego County. And lastly, I want to disclose that I'm a board member. I don't think I said that earlier, but I'm a board member of the Urban League here in San Diego, and I can attest to the work that they do, and that you would get great assistance. But make that phone call. Help is here for you. Do not be scared or worry about calling, because you really can get assistance.
And Steve, I'm gonna let you close
Thank-
out.
Okay, thanks, Frank. And I just want to thank everybody for this opportunity. It was great, and I too learn something every day, and this was a great experience, and I appreciate it. And I just want to let everybody know, and I echo everything that's been said by Jacqueline and Delphina. And obviously, as a servicer, we're here to serve. So please allow us that opportunity to do that. Because again, our best interests are aligned with your best interests, which is the value proposition around home ownership, and allowing people that want to retain their home to provide options to assist them in doing that.
Thank you, everyone. I want to end by saying we hope that you have you enjoyed this session. We tried to keep this brief but informative, and please visit the Urban League of San Diego County website to speak to a HUB certified housing counselor at www.sdul.org. My name is Frank Robinson. I thank you very much for participating. Have a very good night and a blessed holiday season.
Thanks, Frank.
Thank you. Safe travels, young lady.
Thank you, everyone.
All right.
Thank you,
All right.
Frank.
Thank you very
Right.
much. I appreciate the opportunity.
Yeah,
right.
Steve, everybody was outstanding. Thank you so much.
This was
On
great.
time. Thank you.
Yeah.
Well, I like on time. So
That's it.
that-
My dad was in the military. If you were early, you were on time. If you were on time, you were late.
You're late.